Welcome to Trader24 Studios for your daily financial update on the global markets. The parade of corporate results on Wall Street continues, with the majority impressing either with resilience or unexpected improvement. However, the problematic recessionary tide remains in the investment community, justified by the high observed inflation, which in the US at least has reached 40-year highs, while the Eurozone can in no way tolerate the 9.6% June figure, far from any expectation and set limit by the ECB. And considering that the bomb is in the hands of the central banks, which are called upon to tame the dysfunctional situation, it seems that an artificial recession by them would be a better scenario than a break in aggregate demand. After all, the Chinese economy has also been showing signs of fatigue for some time now, and expectations for a recovery in the next 2 quarters of 2022 are also minimal, at least in the words of both the international houses, with their damning reports, and the IMF, which the other day brought in a 3.2% figure after revising from an already lower 3.6% to global economic growth. Moreover, it should not be neglected that the US, apart from now officially having a benchmark interest rate in the 2.25 to 2.50% range after the second consecutive record increase of 75 base points, is also in recession, at least on a technical level, as a decline in GDP growth was recorded last week for the second consecutive quarter. Otherwise, there has been a welcoming softening of the massive US dollar markets, partially decompressing the energy market. Commodities continue the mismatch of dangerously high energy costs and a precipitous decline in agricultural commodities, in the shadow of an endless war. The freight market remains depressed, reflecting the possibility of a slowdown in economic growth, and the government bond market is trying to find its footing in a context of investment uncertainty. You are watching Trader24 Daily Global Market Overview. Let's take a closer look at the situation. Wall Street was up, with investors seeing an easing of the US-China tensions after House Speaker Pelosi left Taiwan without incident. S&P 500, Dow Jones 30 and Nasdaq 100 closed with big gains 1.56%, 1.29% and 2.73%. The New York Stock Exchange Index at 0.68% and firmly above the 15,000 points that have plagued it for 6 weeks, and the small-cap Russell 2000 saw plus 1.41%. The VIX Risk Index lost 8.23 percentage points, dampening investor concern. At the sectoral level, 10 of the 11 S&P sectors closed positive, with energy the only sector to bounce back and technology outperforming by 2.69%. Equity markets gained despite aggressive comments from 4 Fed chairmen. Richmond President Barkin said that there is a path to bring inflation under control, but a recession could occur in the process, adding that he expects inflation to come down, but not immediately, not suddenly, and not predictably. St. Louis President Bullard said he favors a strategy of large rate hikes and wants the Fed rate at 3.75% to 4% by the end of the year. Minneapolis President Kashkari said the Fed is focused on lowering inflation and that rate cuts in 2023 seem like a very unlikely scenario. Finally, San Francisco Chairman Daley said that it will likely be appropriate for the Fed to raise rates by 50 base points at the September meeting if the economic data come in as forecast. US economic data on Wednesday was better than expected. US factory orders in June rose 2% month-on-month, higher than expectations of 1.2%, also marking the largest increase in 5 months. Also, the US ISM Services Index in July unexpectedly rose 1.4% to 56.7, stronger than expectations for a decline to 53.5. Moderna closed up more than 15% on Wednesday to lead gainers in the S&P 500 and Nasdaq 100 after it reported revenue of $4.75 billion for the second quarter, higher than consensus of $4.02 billion, and announced a $3 billion share buyback plan. Energy stocks and energy service providers fell on Wednesday after crude prices dropped nearly 3%. Devon Energy and Occidental Petroleum closed down more than 6%. Also, Diamondback Energy, Marathon Oil and Valero Energy closed down by more than 4%. In addition, ConocoPhillips and ExxonMobil closed down by more than 3%. Finally, Chevron closed down more than 2% to lead the Dow Jones Industrial Losers. In the pre-market now, most stocks are moving unchanged, with the Chicago futures giving no clear direction. In Asia, the Hang Seng gained 0.8%, reacting from a near 12-week low due to unexpected contraction in Hong Kong's economy in the second quarter, caused by problems in transit trade and exports. Sentiment has been weighed down by the downturn in industrial activity and the real estate market, while still absorbing the dangerous release of the domestic PMI, which saw a decline for the fourth consecutive quarter, foreshadowing the worst. Meanwhile, tensions between Beijing and Washington did not escalate amid the visit of U.S. House of Representatives Speaker Nancy Pelosi. Besides, the Chinese seem to have taken both the recessionary wave in the U.S. and the IMF's hellish report, which revised down the country's expected economic growth rate to 3.3% instead of 4.4%, seriously. Japan's Nikkei followed at 0.72% in a session permanently in positive territory, Shanghai at 0.8%, Shenzhen 0.6%, while only the Australian 200 was unchanged, mainly weighed down by the commodity and mining sectors. Comments from San Francisco Fed President Daly, who said he favored raising rates by only 50 base points at the next FOMC meeting in September, triggered short covering in U.S. Treasuries. U.S. Treasuries were unchanged yesterday, with a 10-year yield seeing a 2.75% yield to maturity and at a 6-month low. The 30-year stayed at 3%, with a spread between them remaining wide, reflecting high implied volatility. The 2-year yield held 32 base points higher than the 10-year, while in Europe the German Bund yield was at 0.87%, our spread estimated at 214 base points, the Treasury spread at 185 base points and gilt at 107. In the forex market, the dollar index regained 106 points, with the euro losing 1.02. The yen continued its bullish reaction at 134 per dollar, while the pound remained in a narrow range of fluctuation around 1.21 US dollar, with the impending volatility dangerously rising in anticipation of today's monetary policy report and interest rate announcement and comments from BOE Governor Bailey, as well as Friday's highly anticipated NFPs. Canadian and Australian were up, while the Swiss weakened for a second day to $1.04. The GNX General Index was unchanged in an otherwise quiet session of modest volumes at 0.39%. SPAD gained 1.42%, with palladium seeing 2-week highs at $2,100 per ton, while SDSU also closed with a 1.30% gain, with zinc reacting above 3,300. The SGSA managed small gains of 1.09%, and silver held $20 per ounce. Stagnant trends were seen in oil, with Brent at $97 and crude at $91 per barrel. Finally, in the freight market, the Baltic closed negative for the 8th consecutive day, moving into its 4th consecutive down month ahead of the risk of a severe recession in the coming period, and the main variable being reduced demand for minerals from Brazil, South Africa and Indonesia. Supramax, Panamax and Capesize in negative territory. In terms of economic announcements, yesterday saw the release of the UK Composite PMI at 52.1, 0.7 points below forecast, the US non-manufacturing PMI at 56.7, and the change in crude inventories at 4.467 million barrels, slightly lower than the previous release. Today, we expect the UK manufacturing PMI, the Bank of England's interest rate decision, and shortly afterwards the US initial jobless claims report. As for corporate announcements, today we expect the financial results of Kellogg Company, with projected EPS of 1.04 and revenue of $3.64 billion, ConocoPhillips with projected EPS of 3.86 and revenue of $19.56 billion, and Expedia with projected EPS of 1.58 and revenue of $3 billion. The shows told Pepsi's union with mid-cap Celsius in the energy drink space, in a deal that could be a milestone for the future of the up-and-coming Celsius. PayPal closed up over 9% on Wednesday after reporting adjusted EPS of 93 cents for second quarter, better than the 86-cent forecast, and raised full-year adjusted EPS to $3.87 to $3.97, from $3.81 to $3.93. Norton LifeLock closed up plus 7% after the UK Competition and Markets Authority provisionally approved its purchase of Avast. Shares of cybersecurity companies rose on Wednesday after private equity firm Thoma Bravo agreed to buy Ping Identity. Okta closed up over 6%, while Datadog and Atlassian Corp closed over 5%. In addition, Zscaler, Splunk and Fortinet closed over 4%. CVS Health Corp closed up 6% after reporting second quarter comparable sales rose 80%, much stronger than the expected 1.4%, and raised its full-year adjusted earnings per share guidance to $8.40 to $8.60 from $8.20 to $8.40. Gilead Sciences closed up 4% on Wednesday after it reported second quarter revenue of $6.26 billion, well above consensus of $5.84 billion, and raised its full-year product sales estimate to $24.5 to $25 billion from a previous estimate of $23.8 to $24.3 billion. Neither Nancy Pelosi's visit to Taiwan nor Neither Nancy Pelosi's visit to Taiwan nor the attacks on both the Nomad protocol and 8,000 Solana network wallets seem to have affected crypto markets, as the uptrend in most altcoins continued. Bitcoin extended its losing streak to 6 days, falling 1% to near $22,800. Over the past 2 weeks, Bitcoin appears to have entered a new price range, now hovering between $21,200 to $24,400, a step above the $17,000 to $21,000 range of previous weeks. Ethereum continues to hover in the range between $1,600 to $1,700. As for altcoins, Solana seems to have managed to hold close to its important $40, despite the attack that took place. The biggest gainers today seem to be Monero at $162.79 plus 3.92%, Cosmos at $10.39 plus 2.68%, and Avalanche at $23.63 plus 2.69%. Thank you for joining us today. It was a Trader 24 daily global market overview. Stay tuned for our next comment on the financial markets.